The opening ceremony is about to begin. Please take your seats. Thank you very much for joining us at the KIEP and IMF Joint Conference. This year's theme is 2021 World Economic Outlook, Prevention and Rehabilitation in the Era of Pandemic. Simultaneous interpretation in Korean is being provided. Channel 1 is for Korean on your receiver. It is my pleasure to ask Dr. Heungchong Kim, President of KIEP, to deliver his opening remark. Please give it up for Dr. Heungchong Kim.
Thank you. Good morning, ladies and gentlemen. Welcome to our conference on 2021 World Economic Outlook, Prevention and Rehabilitation. I'm delighted that all of you could join us today in person or online. Before we start, I'd like to express my sincere gratitude to the session chair, speakers, and discussants for participating in our conference. In particular, special thanks go to Ms. Angana Banerji and Ms. Nour Tawk at the IMF Asia and Pacific Department. Without their extensive efforts, this conference could not be possible. Due to the pandemic situation, Ms. Banerji and Ms. Tawk could not be here, but I'm happy to have both IMF economists join our conference virtually. The COVID-19 pandemic that broke out earlier this year has changed our daily lives in various ways. To name a few, the enforcement of containment measures and social distancing have been implemented in many countries. We have been hearing some hopeful news about vaccines lately. However, the vaccines won't bring everything back. Health risks will continue, and the quarantine principles that have been followed up to now will help the future pandemic's prevention. Meanwhile, we need to think about a new way of life that will stem from great transformation or rehabilitation after the pandemic. Digital transformation could be one example, and environment-friendly lifestyle could be another. However, such a great transformation requires huge investment and time. Because of time constraint and uncertainty involved, policymakers and governments in many countries hesitate to investing in the technology required, and instead pursue traditional technology that relies on fossil fuels. Such old technologies could probably help create jobs instantaneously, but it could also lead to a negative impact on our lives. After COVID-19, we are now aware of the need for that great transformation and have better understanding that the transformation should take place soon. Therefore, we need to stick to focusing on how to create jobs together with such a great transformation. Fortunately, policy discussions that take the environment into account are proceeding. For example, such policy directions have begun to emerge from the Korean New Deal, the EU's Green Deal, China's new infrastructure, and the US President-elect Biden's eco-friendly policies stance. I believe that researchers at both the IMF and the KIEP need to think about how the great transformation could occur very soon, thereby making the year 2021 high time for the global economy to find new growth engines. We see that containment measures will be sometimes reinforced and sometimes eased cyclically, thereby mutually interacting with both the spread of the COVID-19 and the impact on the global economy. In this process, I am particularly concerned about the following three uncertainties. First, it is unclear when the vaccines will be readily available. Many challenges still remain to get there, and in the meantime, there is the possibility of COVID-19 reproliferating. Second, China-US tensions could be a long-term challenge to the global economy. We don't expect the ongoing tensions to completely end soon. Instead, the tensions could evolve into long-term strategic competition for technology hegemony between the two countries. Third, current financial markets do not reflect the real sectors, partly because of various economic stimulus policies following the pandemic shock. It's time to monitor rapid changes in capital movement and strengthen a financial safety net. Through this process, the global economy is expected to embark on a path to finally find a balance between prevention and rehabilitation. I look forward to 2021 as a year of getting closer to this balance between prevention and rehabilitation after the pandemic outbreak. Against this backdrop, we hold this conference with renowned experts from the IMF and universities. In our conference, hopefully we can explore the risks from these uncertainties, which especially have a significant impact on Korea and the other Asian countries with high dependency on the foreign sector. More specifically, in session 1, titled 2021 Asia and the World Economic Outlook, we will see the views of two organizations, KIEP and IMF, for the 2021 global economy. In session 2, we will further explore measures of COVID-19 and policy challenges in the Asian countries. As always, through our conference, I'm looking forward to seeing in-depth and constructive discussions. I'm also hoping that all of you will enjoy the presentations and discussions held in our conference. Again, I'd like to thank all of you for being here with us today. 감사합니다.
Thank you very much, Dr. Heungchong Kim. Now we will continue with session 1 under the title of 2021 World Economic Outlook. Dr. Kwon Oh-shin, professor at Korea University, will be the moderator. Please give it up for Dr. Kwon Oh-shin.
Good morning, and thank you very much for having me. And I speak on behalf of Nour and I that we are very grateful to be here and to have the opportunity to present our work to you. Deeply about, but the solutions are not fully clear here. Let me share my presentation and get started. My presentation will last about 20 minutes, and
Miss,
I will be very happy to answer questions.
Miss Banerji?
Can you see my presentation? Yes.
Yeah, but our moderator will introduce you, and
Okay. Sorry.
and you will be the second presentation. Can you wait for a second? I'm sorry.
Sure. Sorry about that.
Okay.
Yeah, that's fine. Good morning. Welcome to the first session. My name is Kwon Oh-shin, professor at Korea University. I will chair the session, and we'll invite two speakers, one from KIEP, another from IMF. Will share their views on the prospect of the world economy. And she already started, so I will ask her to continue. Okay, floor is yours.
I guess you can see this, or do I need to share again?
Can you share your presentation?
Yeah, I guess I need to share it again. Sorry. Yes, is this, can you see this? Yeah. Thank you, I'm so sorry for jumping the gun, and thanks again for the kind introduction. And once again, I'll speak for 20 minutes, and then you have. So today, as the introduction said, I will present the IMF's view of the economic outlook and the main risks, and our policy recommendations for the Asia-Pacific region. Let me begin first with where we stand with recent developments. In a nutshell, we see signs of a multi-speed recovery from the pandemic in the Asia-Pacific region. Asia is where the pandemic began, and it appears Asia is also the region that is emerging first from the pandemic. Many countries in the region have already successfully contained the first wave of the virus. In some cases, such as Korea, second waves or localized outbreaks have emerged. However, a few countries, such as India, Indonesia, and Philippines, are still striving to flatten the virus curve. And it is extremely, on the other hand, it's extremely welcome news that some countries in the region remain largely COVID-free, notably the majority of the Pacific Island countries. Across the region, decisions have been taken to exit from nationwide lockdowns, but the exits have been proceeding at different speeds, reflecting differences in the progress in stemming the virus. In some countries, restrictions have been retightened following second waves, such as Korea and Australia. Countries are also opening up different sectors at different rates. Many sectors are now completely open or working with enhanced health protocols. But notably, as you all know, significant restrictions remain in place. For example, external borders are closed in most countries. As containment measures are rolled back, economic activity is picking up. After the massive plunge in the second quarter, manufacturing PMIs are recovering, and in some cases, they have surpassed the levels of Q1. Service sector PMIs, which cover a broad range of services besides just the contact-intensive services, have also improved, but the improvement is most pronounced for China. Inflation remains low, partly due to low global commodity prices and wide output gap. One notable exception is India, where there has been an increase in both headline and core inflation due to supply-side disruptions, which has also affected domestic food prices. Let me now turn to our forecast. Asia is emerging from its worst ever recession, but at different speeds. For the region as a whole, we have downgraded our forecast by 0.6 percentage point from our June projections. We now forecast a 2.2% contraction in 2020, easily the most severe contraction in living memory. This is mainly because of a much stronger, sharper downturn in India. Bucking this trend, China's outlook has improved, reflecting the impressive bounce back in the second quarter, which has led us to upgrade China's 2020 growth forecast. The economic impact of the pandemic in Korea has been milder than in some other countries due to an effective containment strategy, proactive economic policy response, and Korea has avoided large-scale lockdowns and relied on rapid diagnostics, tracing and isolation and treatment of patients, which has helped contain the virus very quickly. Fiscal, monetary, and financial policies have also been supportive. On-budget spending has increased by almost 2% of GDP in 3 supplementary budgets, and there were about 11% of GDP in off-budget measures. As a result, activity has been improving since May. Real GDP is projected to contract by 1.9% in 2020, a better outcome than peers elsewhere in Asia and among other advanced economies. We continue to expect the recovery to be drawn out. Potential output in 2025 is projected to be, on average, about 5% lower than the pre-pandemic forecast in January. The extent of scarring will vary across countries, depending on the economy's dependence on the sectors that have been most hit by the pandemic, such as the share of the tourism sector. It'll depend on the policy response, and it'll depend, as we heard in the introduction, on the structural factors that affect the economy's ability to reallocate resources effectively. Macroeconomic policy support has prevented much worse growth outcomes in Asia. The announced fiscal policy support is not only historically unprecedented, but as reported in the IMF's Fiscal Monitor, it is also higher than the support provided in other regions, especially in advanced economies in Asia. That said, a lot of this support has been in the form of loan guarantees and other quasi-fiscal measures, which tend to have lower growth multipliers. Monetary policy has also been eased across Asia, including policy rate cuts and unconventional measures in most advanced economies and a number of emerging market countries. Given the unprecedented policy support in 2020, a key assumption underpinning our forecast for 2021 is that there will be a smooth handover from public sector demand this year to private sector demand next. This is partly because the extent to which public sector support can be sustained in Asia is uncertain. But whether a smooth handover occurs remains to be seen, and if it does not, the growth profile may not be as favorable as we project. Let me now turn to risks. As was mentioned in the introduction, there are upside and downside risks. Let me acknowledge first that there's an important upside risk created by the possibility that a vaccine could be successfully developed and distributed widely and soon. Asia is well situated in this regard, with India and China being major global producers of vaccines. But the balance of risks still remain tilted to the downside. Let me start with trade. As the world's second largest economy, China remains the main trading partner for the region, accounting for more than 20% of Asia's total trade. The recovery in China and in Asia's other main trading partners, the United States and the Euro area, will support regional growth in the second half of 2020. Overall, though, Asia's trade is still expected to contract in 2020 relative to last year. Beyond 2020, trade is expected to recover in line with global growth, but a return to trade as the main engine of growth does not seem to be on the cards. Unlike the period after the global financial crisis, China is taking a more cautious approach to policy stimulus to avoid worsening its own vulnerabilities. And the cloud of trade tensions makes us cautious about projecting trade as a key driver of growth. Tensions between China and the US on trade, financial flows, technology, and geopolitics are concerning, not least because these giants are major hubs of global value chains and sources of knowledge diffusion to the region. Using the IMF's GIMP model, we estimate that the impact of a US-China decoupling would reduce real GDP in China by 4% over a decade, with spillovers to the rest of Asia of a similar magnitude. This reflects the depressing effect of the US-China decoupling on trade in high-tech products, the impact on productivity as countries move towards inefficient production, and a chilling effect on knowledge diffusion, which shrinks production possibilities. The impact on China may be larger if tensions lead to a broader decoupling of China from technological hubs across the OECD. Many Asian economies depend on tourism and remittances, which will take time to recover. Remittances are cyclical, and their future course depends on the strength of the global recovery. A prolonged pandemic will be especially costly for low-income and developing economies, which rely on tourism for jobs. While some countries have started diversifying their economies, reorienting growth models is neither quick nor easy. The second risk I would like to flag is worsening balance sheets of the public and private sector alike. This deterioration will affect the public sector's ability to absorb risk, support growth, and meet longer-term goals. On the private sector side, the weakening will affect the firm's ability to survive the economic contraction and financial institutions' capacity to support the flow of credit to the economy and investment. Many Asian corporates and households already entered the pandemic with high leverage and a weakened financial condition. The economic contraction this year has worsened leverage ratios further, and this is concerning. Corporate profitability in Asia has weakened since the global financial crisis. Corporate sector vulnerability, measured by the share of firms with interest coverage ratio below 2, has increased since the beginning of the pandemic, especially for small and medium-sized enterprises. And in some countries, firms have been relying on fiscal support in the form of guarantees and loans to service debt. As this quasi-fiscal support begins to wind down, the very survival of SMEs may be in question, challenging a robust pickup in private investment going forward. Non-performing loans are rising and could rise even more sharply if deferred loans become impaired over time. With rising non-performing loans and declining returns on assets, the protracted slowdown is increasing financial sector vulnerabilities, especially in Asian emerging markets and low-income countries. As the IMF's GFSR has highlighted, in an adverse scenario, a sharp worsening of financial conditions could raise concerns about the underlying health of some financial institutions in the region where capital buffers would drop below regulatory minimums. The sharp, unprecedented portfolio capital outflows from Asia when the pandemic started have stabilized, although net outflows remain large in comparison with pre-pandemic levels. But continued high levels of uncertainty leave us worried about the impact of renewed spikes in global risk aversion and a return to tighter global financial conditions. Another risk-off episode, a rise in global risk aversion and a return to tighter global financial conditions could lead to a resumption of capital outflows. Another risk-off episode could also tip struggling SMEs or small and medium-sized enterprises into bankruptcy, the worsened credit risks and financial stability make debt overhangs worse and has the potential to push vulnerable countries into a debt crisis. The median public debt to GDP ratio is also ticking up in the region, and the outlook is for further increases. There's a wide variation in Asia, in the Asia Pacific, with some countries having debt ratios well above the regional averages, as well as pre-existing vulnerabilities to external shocks, which the pandemic has aggravated. Given the elevated vulnerabilities, sovereign debt ratings are being downgraded for several Asian emerging market economies. For many, balancing the multiple goals of pandemic recovery, rebuilding fiscal buffers, and investing in climate resilience is proving exceptionally difficult. Let me now highlight the state of Asia's labor market based on analytical work we have done this time. The picture is grim, and it is likely to weigh on private demand going forward. The pandemic is taking a severe toll on Asia's labor market. Labor market indicators have already worsened more than the global financial crisis. Of note, labor force participation has plunged, especially among female and younger workers, given their outsized presence in the trade and services sector. On top of the grim labor market picture, redistributive policies in Asia are quite limited, and the size of informal sectors is rather large, making it difficult to reach and support those who are most vulnerable. Taken together, these factors are likely to add to the human toll and to weigh on private sector demand. Income and wealth inequality, which was already rising in Asia before the pandemic, seems likely to rise further unless decisive measures are taken to change the course. This is the sobering message from past pandemics. What lies behind the story is the greater burden of economic dislocations on those at the bottom of the economic ladder, notably those with minimal education and skills. The risk is that increased inequality could morph into social unrest as those at the bottom lose hope that better times lie ahead. Let me now turn to our policy recommendations, but to provide some context for our policy emphasis, let me first highlight the key conclusion of some other analytical work we have done this time and about policies that have been successful during the pandemic, and my colleague Nour will talk about this in more depth shortly. Briefly, Asia's experience with the pandemic highlights two main lessons. First, an early public health response when infection rates are still low is essential for flattening the virus curve. On this front, Asia did particularly well relative to other regions, probably due to its experience with previous pandemics. Second, relaxing containment measures only after the virus has been suppressed is associated with better economic outcomes. On this front, Asia also did well, and with most countries opening reopening their economies when new cases were low, which has paved the way for a strong economic recovery. With all this in mind, let me now highlight what we consider are the priorities for managing the pandemic, supporting the recovery, and transitioning to a sustainable and inclusive green growth. First, an effective containment, testing, tracing, and system is going to be vital, and a good healthcare system is also going to be vital. Asian emerging markets are ramping up testing. India has done particularly well in this regard, but on average, there remains a big gap with testing rates with advanced economies. Countries which have yet to bring the outbreak under control need to find a better way to achieve better outcomes. Micro-containment measures are necessary in all countries alongside timely testing and effective contact tracing. There is also significant scope to improve and expand the healthcare systems in most Asian emerging markets and low-income countries. And all countries need to plan ahead to secure adequate vaccine supplies when they become available, including through multilateral vaccine sharing efforts. Strategies for the distribution of vaccines to avoid bottlenecks and maximize the gains from vaccines are urgently needed. Second, timely targeted fiscal support can be helpful as well. As Nour is going to probably talk about, many Asian emerging markets and low-income countries are constrained in providing large additional fiscal support without risking a major debt blowout or downgrades in their credit ratings. Our analysis highlights the effectiveness of such support in dampening the economic cost of containment measures. Our simulations show that fiscal measures that are targeted to where the needs are greatest are more effective than general handouts in supporting activity and health. Countries need to therefore do better in terms of targeting the fiscal support. Public investment also needs to be geared towards speeding up the transition to a more climate resilient and low carbon economy, especially in countries that are routinely impacted by major weather-related events. Third, the composition of fiscal expenditure is also very critical. Better targeting and prioritization of scarce fiscal resources, focusing on the most vulnerable and on improving health facilities is a winning proposition. As always, though, a credible medium-term fiscal strategy is needed to address concerns about fiscal sustainability and reduce uncertainty, including through greater revenue mobilization and reducing waste on the spending side. Turning to monetary policy should remain supportive while output gaps are large and inflation is low. In many cases, it is also important to improve the transmission of monetary policy so that policy rate changes are effectively transmitted to the economy. Given the exceptional magnitude and nature of the crisis, debt monetization may be warranted in some cases where needed fiscal support to the economy is greater than the available fiscal space, borrowing costs are very high, and inflation expectations are well anchored. However, such exceptional policy support needs to be just that, exceptional. And it must be well communicated, implemented in a time-bound manner, and within an operational framework that preserves central bank independence and credibility. And finally, policies also need to focus on reducing scarring and supporting resource allocation. Labor market policies should be laser-focused on increasing labor force participation, especially among women and younger workers, and preventing worker disengagement and skills erosion. Enhancing training programs, establishing or improving skills matching, lightening the regulatory and financial cost of hiring, and encouraging new and more flexible ways to work are all priority. Second, the long duration of the pandemic is making it increasingly difficult to distinguish between temporary liquidity shortages and solvency problems, including for small and medium-sized enterprises. Firms must be provided incentives to restructure if needed, and viable entities should be assisted to overcome debt overhang and retool their business models. To facilitate debt restructuring and support resource allocation, insolvency frameworks need to be upgraded so that they are effective. To summarize, we are seeing a multi-speed recovery emerging in the Asia-Pacific region. But the recovery is far from entrenched, and there are significant downside risks. Macro policy support should not be withdrawn prematurely before the recovery has gained traction. Further support to reduce scarring and improve the economy's ability to efficiently reallocate resources and generate inclusive and greener growth must be the main priorities in the period ahead. With that, I thank you for your attention, and I look forward to the question and answer when the sessions begin.
Okay, thank you very much for your excellent presentation, Dr. Banerji. And at the end of session, we'll have Q&A session. So can you stay for a while there? Okay.
Yes, sure.
So as you know, forecasting future is always difficult. And under the current situation we are experiencing an unprecedented event, it is going to be even more difficult. And in this regard, it is greatly beneficial to listen to an expert's view on the prospect. Fortunately, we have another speaker from KIEP who will share his view on the world economy. So let me invite Dr. An from KIEP. He is Director General of International Macro and Financial Department. Okay, Dr. An, floor is yours.
Okay, thank you, Professor Shin, for a nice introduction of me. And I'm Sungbae An. Today, I will talk about the 2021 World Economic Outlook. Okay. So it has two parts. One is the general overview, and I'm going to cover some of the major economies overview. So the KIEP, we project that the world economy will grow at 5.0% at 2021 after there is a shortage of output of negative 5.1% this year. So in the graph, you can see that there's many the bullet points. The blue point refers to the 2019 growth rate, and the yellow points refers to the year 2020, this year's the growth rate, and the red point shows the next year's 2021's growth rate. So as you can see, in the most of the countries, next year's growth rate is somehow a little bit higher than last year, 2019 growth rate, but the absolute value of the growth rate of next year is smaller than this year's growth rate. Okay, so that means that, well, even after even though there is going to be some recovery in the next year, the level of the output will not gain back to the 2019 level in general. Okay, so it happens for many other economies too, in major economies too. So the U.S., the U.S. case, this year's growth rate is projected to at negative 5.0%, and next year, to 2021, 2.8%. And Eurozone, well, it has the big impact on this year from the containment measure with the COVID-19, where this year's growth rate will be negative 10%, and next year it will recover to 3.7% positive. And Japan also has the same similar situation. This year it goes to the negative 5.8%, and next year it goes to brings to the 2.0%. The China, on the other hand, has a little bit different situation. So where China's case, the COVID-19 has a big impact on the first quarter of this year. So and after that, second quarter and third quarter, it has recovered quite fast. So this year's growth rate is 2020. This year's growth rate is projected at 2.2%, which is positive compared to other, other economies is having a negative growth rate. And next year, the growth rate is going back to quite high on 8.4%. And India, this year, again, well, from the containment measure, it has a big negative impact on its output, minus 10%, and next year is going back to 2019 level with the 9.0% growth rate. And the Asian 5 has this year negative 3.5%, and next year 5.5%, means that, well, by next year, well, it comes back to the, well, little bit higher than the 2019 level. And the Russia and the Brazil have seized a similar situation, and their, well, roughly their, well, growth rate this year is about negative 4.5% and negative 5.3%, well, respectively. And next year it goes to the 3.2% and 3.1%. Okay, so I mean, what makes this the result, the growth rate, is that actually depending on the COVID-19, the development of COVID-19 over time. So this is the recent figure. So the red line refers to the daily new cases, well, 14-day average, and the blue bars refers to the daily death, the new death. Okay, so when you can see, well, the China, the on far right on the upper panel, shows that, well, China is affected by very early stage, well, in the first quarter, and a little bit of the first half of the second quarter is affected by this COVID-19. But after that, well, the cases is very well controlled, while the US and the Eurozone has a big, well, recently there's the new wave, a third wave is started in the US and the Eurozone, and here, as you can see in the Eurozone, the toll, death toll, is rapidly increasing nowadays, and also so that means that the new the lockdown may be implemented in the, well, in some part it is already implemented and there is coming on. And while the India, so well, it has been also hit very severely during the second quarter and third quarter, and recently it looks getting better. So the Russia and Brazil also hit very severely by this COVID-19. So this is the quarterly growth rate, well, compared to the same quarter last year, the year-on-year growth rate of the selected countries. So what you can see is that on the left-hand side, well, there's domestic economies, including the US and the EU and Japan and Korea. So the Korea's case is, well, represented by the yellow line, and what you can see is that, well, in the second quarter and third quarter, it shows the negative growth rate, but compared to other domestic economies, well, this step back is quite small compared to other domestic economies. Emerging economies, well, as I said before, so the China is already getting back on track, and while other countries are still suffering from COVID-19. Okay. So this year, I mean, well, we are presenting the keyword for the 2021 world economy as this. So one is the prevention and rehabilitation. So prevention means that, I mean, these two are some more medical term rather than the economic terms. But, well, prevention, well, includes the vaccination for sure, and also some other containment measures like the social distancing and wearing masks and other things. So this, well, even though there is some good news is on the vaccine development right now, but I mean, there's still is a long road to go further, right? So I mean, it takes a lot of time to the whole population to get, well, I mean, or sizable, the meaningful portion of the population be vaccinated, and they're so so there's a, I mean, as well, Dr. Angana said, where there's the Banerji said, is upside risk and downside risk coexist, but well, currently it looks like that the downside risk is a little bit bigger. And the rehabilitation is a little bit different, has this meaning. So, I mean, well, from the economic terminology, well, it is, I think it is something in between economic recovery and some reconstruction. Okay, so reform or reconstruction. So currently, the many economies is hit by this big shock, and well, the governments, major governments, put a lot of resources to make the economy get back on track. But somehow, well, since the shock is prolonged, well, I mean, is quite persistent at this point, and they're prolonged, well, compared to what has been expected. So there can be the physical space can be limited, well, at some point. So this rehabilitation means that, well, when the government uses, to support the economy, uses this fund to support the economy, well, the long-term plan should be, well, taken into account, and their, well, I mean, this is, well, should be well managed. Okay, so I mean, this is going to be the balancing between this prevention and the rehabilitation is somehow something what the world economy should pay attention to in the next year. So, and there's the three, well, the major risk factors, well, that can our estimate, well, the forecast can be wrong. So one is that the first risk factor is the vaccine development and distribution under COVID-19 recurrence. So, well, as I said before, the vaccine is now is, well, there is 3 or 4 the very the promising vaccines are developed already, and well, we are still waiting for that those are get approved for distribution, and but there's some but other things also happen, right? So I mean for the whole population or the sizable population to be vaccinated, so well, after the development, you need to well, spend a lot, invest a lot to produce them and distribute them, and to get to make, well, people get vaccinated, right? So and each step is somehow there's some the hurdles on each step, so that can make, well, this vaccination procedure be there's some uncertainty related to this vaccination procedure. And the second one is that, well, the prolonged U.S.-China tensions. Well, now U.S. has going to have a new government, and well, so maybe there's some big changes from the previous, well, Trump government's, well, the policies on China. But, well, what we have, what we understand is that even though maybe, well, the tariff wars maybe can be lessened between the U.S. and China, but in the long run, the long-term frictions still remains. Like the technology wars and well, still going on, and well, it has and it is going to be somehow the tensions going to remain, well, during the new new U.S. Administration. Okay, and third risk factor is that the gap between the market and the real economy. As you know, so now the stock market goes high, well, nowadays, and while the real economy, well, like the employment has not been really recovered yet. So the gap becomes wider and wider, And well, one thing is that well, after the global financial crisis, well, there is some the funding. There's some structural changes in the funding market. Well, basically, so before the global financial crisis, the banks the banking sector plays an important role on the funding of especially the dollar funding. But well, after that, including the Basel III, much of the regulations pushed on the banking sector, and many of the dollar funding is moved to the non-banking sector, like capital markets. Okay, so somehow after the COVID-19, a bunch of the large liquidity has put on the market, and it draws basically the stock market rallies, and the real economy's response is still dragged. Okay, so there's this gap, and this will may lead to some unfortunate situation when the recovery is still is prolonged. Okay. So having said that, now we are thinking about the downward scenario. Okay, so the baseline scenario is that that at 2020 the world economy will grow at -5.1%, and 2021 recover at the 5.0%. But with the COVID-19, the additional assumptions like the COVID-19 resurgence continues for the next year, and the investment slumps in the major economies happens, and there's a risk aversion is revealed during the among the investors, and there's some stock market decline is realized. Then with under those conditions, our downward scenario shows that at 2020, the growth rate will be negative 6.4%, and 2021, the growth rate will down to 2.2%, from 5.0% at the baseline. So with on the right-hand side, you can see that with the downward scenario, 2021 the GDP level, global GDP level is lower than 2018 level. Okay, so we'll briefly thinking about see some financial market. So first, the FX market. So we are projecting that the weak US dollar will continue amidst the uncertainty. So while the weak dollar expected, uncertainty remains from political issues and the COVID-19. So political issue means that there's some still the U.S. fiscal stimulus deal is still on the way, and U.S.-China tensions will be going on. So and the COVID-19, they're going to be recently the third wave means that the recurrence of this COVID-19 may be related to the lockdowns. So that means the brings to the strong dollar at the end of the day. So as for the Korean US dollar interest the exchange rate, there's a slight decline, means that slight strong Korean dollar against the US dollar is expected with the recovery in exports and economy. And also, there's a tendency that Korea and the Korean won and the Chinese yuan is strongly correlated recently. So the strong Chinese yuan has an impact on the Korea US dollar exchange rate also. Okay, so the interest rate, so we are thinking that the government bond issuance, the government bond issuance increase from the fiscal expansion means that the interest, well, making the interest rates goes high, a little bit high, but the major central bank's monetary easing, well, there's some balancing between those two. So basically, the bond yield is going to be limited, and with both sides of risk. Okay. The oil price is that, after COVID-19, there's a historical drop in the oil price during the April this year, and it has gone back to about $40 level recently, and afterwards. But we think that this one started from the big expectation of the big cut in the demands on the oil, but so there's some excess supply there. But next year, the excess supply will disappear. So we think the oil price will go a little bit higher than this year, but somehow the hike is limited. Okay, so. I think I already talked about the major economies situation briefly, so I think we stop here. Yeah, thanks.
Okay, thank you very much for another excellent presentation. We do not have enough time to have all the questions to address, but let me open to the floor. And if you have questions, please identify yourself and to whom you are asking questions for. I think that this is live on YouTube, and we also collected some questions. A staff member gave me some questions collected from the YouTube. So I can ask the questions from the collected questions from the YouTube. And the first question is for both of you. And the question is the following. So Mr. Biden is elected, I believe, as a president of the United States. So what do you think is the most distinctive difference in the US and the world economy with the new president? So let me ask the Dr. Banerji first. Can you answer to the question?
Thank you. I think it's very easy to answer this question. We don't comment on we don't make comments on elections. And like everyone else, we are waiting to see what the policies are in the new administration. And as and when they are revealed, we will discuss it within our institution and be ready to speak about them. So for now, I give hand the hot potato over to my co-presenter to answer.
Okay, please, Dr. An.
Okay, so this is still, still we need to think about it. But the one, obvious result, one obvious impact is that I think on world economies, that basically there's going to be a less short-term uncertainty. Well, the short-term uncertainty will decrease a lot compared to the Trump administration. So, I mean, I think the economic the policy or the diplomacy will be based on the more long-term the plan, and the fluctuation of the mood is going to be the volatility will be lessened, so that will help for the future growth of the world economy. And another one part is that I think the Biden administration will try to bring back the leadership of the U.S. in the global economy. So I mean, I think it will try to do more role. I mean, take on the more role on the WTO restructuring and then those part. Okay, so that is my 2 cents.
Okay, thank you. Oh, so thank you very much for your answer. So let me invite Dr. Kang from the floor.
Hi, my name is Tae-Soo Kang, and I was a former senior fellow at the KIEP, and I have a question for the presentation of IMF. And I think your recommendation sounds like confuses me because you suggest the easy monetary policy to try to cope with COVID-19, and as well as your suggestion is tightening macroprudential policies. So I think it seems to me the monetary policy and macroprudential policies go hand in hand, and that's the principle. So why do you think it is reasonable for each central bank adopt easy monetary policy as well as on the other hand, tightening macroprudential policy, which sometimes collide each other? So I think the policy, the signals from central banks sometimes obviously very confusing to the market. So what do you make of it? Thank you very much.
Thank you very much. Yes, it's a complex. It is a complex situation because on the one hand, the recovery is still weak and uncertain and tentative, and in many countries, output is below the potential output, so the output gap is negative. So for that reason, we say monetary policy should be provided, because monetary policy, in a way is much more efficient, as they say, in getting into all the cracks of the economy. It can reach, provided monetary transmission is doing well and is efficient, monetary policy can get into all the cracks, and it should be provided to support the economy. But there are a few countries where financial sector and asset market risks seem to be elevated. And this is because the pandemic has lasted for quite a while, and there has been monetary policy stimulus for quite a while. And it is increasingly difficult to assess which households are viable, which ones are not, which corporations are viable and which ones are not. So instead of leaning against the rising financial risks, given that there's a need to support the recovery, but at the same time mitigate financial sector risks, the solution is to provide support for monetary policy and, in a targeted manner, tighten macroprudential policy where financial risks are elevated. That is not true in most countries, but there are a few countries like Australia and China where the recovery has started, and right now there is both the need to continue supporting the economy, but at the same time make sure that financial risks don't get out of hand. And in a way, it is true that if you tighten macroprudential policy for those borrowers who would have borrowed without the macroprudential tightening, it counteracts the impact of the monetary policy. But it is a way to reduce financial risks, because in the end, if the financial risks are elevated and they materialize, then the recovery is going to take even longer. So it's partly because of the long duration of the pandemic that by now we are not just focused on supporting the recovery, which needs to continue to happen. But at the same time, we need to keep an eye on rising financial sector risks, and in targeted manners, in a limited way, use macroprudential policy to mitigate the financial sector risk while continuing to support the broader economy where risks are less elevated. I hope my answer clarified the the seemingly difficult trade-off in these two policy recommendations.
Okay, thank you. There's another, we are almost out of time, but there's another, person from the floor, Professor Kim.
Okay, thanks, Chair.
Please make it brief.
Yeah, my name is Jinil Kim. So let me continue the previous question to be more specific. On your page 22, which is the page 25 of our handouts, you said a return to risk aversion could hurt financial stability. I think that's, I didn't read the whole thing, but that's probably the only subjunctive mood sentence in your whole slide. So continuing previous question, you said it's complex, but to make it not convoluted, even though it's complex, I think what is your conditional sentence behind this could? If you can say in the context of Korea, that'd be great. If not, at least in the context of Asia, what condition are you worrying about when you say it could hurt financial stability? That will be very helpful to the audience. Thank you.
So let me make it more concrete. So capital outflows have quietened down. There was a huge outflow, but now there has been some stabilization. And many corporations are still able to now borrow because the risk aversion, the degree of risk aversion that had happened right after the pandemic had started has become less. So many corporations can borrow cheaply, and monetary policy is also supportive. So it is helping support the recovery. Now, if there was a global risk aversion because of major escalation of the pandemic, say, for example, whatever the reason is, and if there was another major capital outflow, then that could make it harder for corporations to borrow because everyone is too afraid to lend them money anymore. And so those, if corporations in Korea for the households and corporations have very high debt, now they often borrow in order to roll over their debt, and their debt could still be serviceable if financial conditions and borrowing costs remain low. But if there's another episode of risk aversion and interest rates increase, the rates at which markets can lend to the corporations increases tremendously, or the rates at which banks can borrow from the markets also increases tremendously. Or if banks cannot issue equity because of the big decline in their share prices, and it is a big hit on their capital, then it is of concern because then the banks may not renew the corporate debt or roll over corporate debt. So basically, that is the whole sequence of events that we are worried about. Right after the pandemic started, there was a major outflow of capital, and everyone had a big problem with financial conditions because in many cases also the exchange rate depreciated, making it more costly to borrow in local currency terms. The risk premium increased tremendously, and now things have improved. But if there was another risk aversion, that whole episode, that whole channel of contagion or the impact could recur again. And so that is what we think. We see that as a risk. We don't see that as something that is definitely going to happen. But these risk aversion episodes can be triggered by global events that are outside a country's control. So it is something that we are very mindful about. It is also true that in many cases, some stock markets and some stock prices seem to be going through the roof, and there could be a correction in those stock markets, which could have implications for others, could transmit to other financial markets. So basically, we see this as a risk, not necessarily a baseline or something that is about to happen. And we are worried that given the high debt in many countries of corporations and households, this could worsen their balance sheets. And that means they would be able to demand less and their debts could go out of control, or they could be in a position that they cannot repay their debt. And that could have financial sector implications. It could bring down domestic demand and reduce growth. But again, it's a downside risk, not the baseline.
Okay, thanks. This is very interesting session and getting more exciting, but unfortunately we are out of time, and I think I have to close the session. So please big hands to the speakers. Thank you.
Thank you very much.
Thank you very much to all speakers, and especially for Dr. Banerji. We will now have 10-minute coffee break, and we will start session 2 at 10:20. Thank you very much. Session 2, and the title of Session 2 is Measures for COVID-19 and Implications on Asian Countries. Dr. Daniel Kim, Professor of Korea University, will be the moderator of this session. Please give it up for Dr. Daniel Kim.
Thank you. Thanks for the introduction. So we heard in session 1 the Asia and World Economic Outlook, both one from the IMF and the other one from KIEP. So session 2 will talk more specifically or topically about the COVID-19 issues and its implications for the Asian economies and of course, for Korea. So we have 2 presentations. The first one will be done by the IMF, also at the Asia Pacific Department, and the second one will be done by Professor Inkyo Cheong. So the first presenter is Dr. Nour Tawk, who is an economist at the APD. And then, is she ready online? Oh yeah, okay, see you. Yeah, hi. Oh, my computer is like 20 seconds lagging behind, so okay. The floor is yours, you have 25 minutes.
Okay, thank you so much. Let me just... Okay, hopefully everyone can see my screen now.
Yes, we are.
Okay, well, thank you so much for the introduction, and thank you for joining our outreach session for our regional economic outlook. I am presenting one of the analytical chapters that are featured in our regional economic outlook. It's titled COVID-19 Lessons and Exits in Asia, Some Lessons. I am only one of the co-authors. We had a fantastic team, but I will be presenting today the analysis on lockdowns and exit in Asia and the lessons we derived from their experience. My colleague Angana covered a few of the lessons we learned, but I'll go more into detail. So let me just get started. Well, we quantify and we derive the lessons from the COVID-19 pandemic through quantifying the impact of containment measures on COVID-19 outcomes, that is infections, and also on economic activity. To do so, we combine daily data from Johns Hopkins University on COVID-19 infections and fatalities with containment measures data from Oxford University. We also put together a novel data set of high-frequency indicators that proxy economic activity, such as nitrogen dioxide emissions, flight, energy consumption, and mobility data. The daily data allows us to assess the impact of containment measures at a daily frequency instead of having to wait for lagged economic data, such as GDP or industrial production. We use local projections method by Jorda to estimate the impact of containment measures on COVID-19 infections or economic indicators. So IT, that you see here in the equation, is the log of the number of infections or the log for the economic indicators at country I and date T. CIT denotes the containment stringency index, which we get from Oxford University, which is about the containment measures. And X is a vector of control variables. It includes daily temperature, humidity levels, also changes in mobility, and also, for example, testing capacity of countries and testing and tracing policies, as well as some other countries, specifically near quadratic and cubic time trends. And then we derive impulse response functions, which are computed through the estimated coefficient of theta h. So let's look at the results. The results show that containment measures have been very effective. The tightening of containment measures lowered COVID-19 infections by almost 300 log percentage points, or in other words, about 90% after 30 days of the implementation of containment measures, relative to a baseline where you have no containment. Containment measures, if you look on the right-hand side, worked through their impact on mobility. And that's how they were able to reduce COVID-19 infections. However, the effect is stronger in countries where mobility was much more reduced. So we see that COVID-19 infections fell at a larger scale in countries that curtail mobility, where they have a reduction of a low mobility, versus countries that remained having high mobility. But while containment measures were very effective in reducing COVID-19 infections and fatalities, and this laid the foundation for medium-term growth, however, these measures led to unprecedented short-term economic losses. When you look on the left-hand side chart, what we are seeing is the growth revisions for countries, and they are related to COVID-19 fatalities. So what it's showing is that in countries that were hard hit by the pandemic, where they had large numbers of fatalities, growth contracted very sharply. Meanwhile, if you look on the right-hand side, our results when we use nitrogen dioxide emissions, which is our variable of choice to proxy economic activity, and I will explain that in the next slide, we see that NO2 emissions fell by almost 99% 30 days after the implementation of containment measures relative to a baseline of no containment. What does it mean, this loss in nitrogen dioxide emissions? Well, when we translate them to losses in economic activity, they can be equal to about a 12% decline in industrial production month on month. So how do we get this relationship? Well, I mentioned initially that we had a large data set of high-frequency indicators, but we choose to mainly focus on NO2 emissions because they are strongly associated with industrial production and economic activity. They are historically linked to the combustion of fossil fuel in industrial production, and also the emissions of oxides through mobility and basically car mobility. So what we do is that we use a historical data set from 1990 to 2018 for 38 OECD countries, and from that we find that they are strongly correlated with conventional measures of economic activity, such as GDP growth, manufacturing, and industrial production. But also we use the higher frequency data, and we restrict it to the period that we are doing the analysis for containment measures, and we also get the significant relationship between NO2 and industrial production. From that, we derive that the losses in industrial production, which you see here, which are about 800 log percentage points, will be translated to 12% in industrial production due to containment measures. The results for other indicators that are more sector-specific show also a very large contraction. For example, for flights, energy consumption, mobility, like retail mobility or transport mobility, we see that the same pattern, that they all collapse after the implementation of containment measures. Our results are robust to alternative specifications. I won't cover this slide for the sake of time, but if you have questions, I'm happy to come back to it. Instead, let's move on to the lessons that we learned from Asia. As Angana mentioned, countries in Asia were among the first to be hit during the pandemic, and many of them locked down their economies to halt the spread of the virus. They used quick and decisive actions that allowed for them to gradually reopen their economic activity. In order to see whether the policies they took helped deal with the pandemic, we add an interaction term to the baseline specification, which is shown in the equation. We use the smooth transition autoregressive model, which is developed by Granger and Teravistra. And this will allow for a country's response to vary by according to a country's characteristic. For example, when we're looking specifically at this weighting function f of z, f is a weighting function, and it will assign regime weights that vary between 0 and 1. These weights are assigned according to f, and for example, so this how to interpret what this means? This means that the weight means the probability of being in a given state. So for example, if the weight is high and close to 1, for example, for fiscal policy, then this means that the country used very high fiscal policy. If the weight is 0, this means, or close to 0, then this means that the country gave very little fiscal policy support. So let's look at the results. The first lesson from Asia that we learned speaks about the importance of acting fast. We computed what is referred in epidemiology as the public health response time. This means this is the number of days that it took for the authorities to implement containment measures after a significant outbreak has been confirmed in the country, and it is set at 100 cases. So it means how many days did it take for a government or authorities to put in place containment measures other than international travel restrictions after the number of cases in the country had reached 100. When you look on the left-hand side chart, we see that actually Asia did very well compared to the rest of the regions, and they acted fast. This is possibly due to the past experience of Asia with other pandemics. And this fast or short public health response time played a big role in curbing infections. When you look on the right-hand side chart, we see that for countries that had a short or a fast public health response time, containment measures were very effective. However, countries that acted slow, and you see that in the last bar, the result is not statistically significant. The empirical evidence that we found in the previous slide is also supported by the model analysis, which is based on the susceptible, infected, removed, and recovered, the SIR macro model that was put in place by Achenbaum, Rebello, and Traban. And this is interacted with fiscal policy. This model also highlights the importance of early intervention. On the left-hand side, what we see is that when containment measures are delayed, the model simulations are illustrating that the cumulative number of infections is significantly higher. This means then, in conclusion, that when you look on the right-hand side chart, the depth of the economic contraction will be much more pronounced. And this is when you see that a delayed response, that's the red line, you see that the impact on GDP is much higher than for an optimal response. And why would that be? Well, when you have raging infections in a country, then the negative externalities that are associated with economic activity are very large. So even if containment measures are eventually introduced, the delayed response will still lead to higher fatalities and economic losses. Now, let's look at lesson 2, which would be to put in place strong testing and tracing policies to avoid a second wave of infections. Strong testing and tracing policies, such as the ones that have been implemented in Korea, for example, along with targeted lockdowns, appear to be crucial in avoiding a spike in infections after containment measures have been eased. So when we look on the right-hand side, we see that the rise of infections 30 days after the easing of containment measures or the easing of the lockdown do not lead to a statistically significant increase in the number of COVID-19 infections in countries that have strong testing and tracing policies at the time of exit. This is a sharp contrast to countries that have weak testing and tracing policies. We see that there is a significant rebound in COVID-19 infections. Again, if you look on the left-hand side chart, we see that in Asia, testing and tracing policies at the time of exit are generally high in comparison to other regions. This may explain Asia's relative success in restarting their economies without encountering a large spike in COVID-19 infections that we are witnessing in other countries. Moving on to Lesson 3. Lesson 3 speaks about the importance of the timing of exits and getting the timing of the exit right. What the results show on this slide, and if you look on the right-hand side, in countries where they eased lockdowns, where the new infections, the new cases of infections at the daily level were very low, witnessed a significant increase in mobility after the exit. Why is mobility important for us? Well, mobility is a proxy for the individual's behavior in relation to the fear of being infected. If there are high infections, if you are scared of getting infected, it is likely that your mobility will be very reduced and you do not want to leave your home. So in turn, this means that when mobility increases, then we have greater economic activity. So we see that in countries that had low new cases at the time of exit, transit mobility really increased significantly increased after the easing of the lockdown. However, in countries that started reopening when the number of infections is still very high or is increasing, mobility does not increase significantly, and neither did economic activity. So this points to a lack of confidence and fears of a second wave of infections. Again, if you look on the left-hand side, we see that in Asia, the number of new cases at the time of exit is really low in comparison to all the other regions of the world, which could explain why Asia is doing better on average. What I showed you was the empirical evidence that supports these results, but when you look also at the model simulations, they also illustrate another dire consequence of exiting too early and before the pandemic peaks. And this is the chart on the right-hand side. Early exits lead to a higher number of infections and fatalities, and this can plunge the economy into a second recession, and it can weaken the medium-term outlook. The last lesson is about taking action. Governments can mitigate some of the costs of containment measures, and they can do so by using supportive macroeconomic policies. This brings us to lesson 4, which is to continue to use macroeconomic policies to support and to cushion the blow. The results on from our analysis, which are shown on the left-hand side chart, estimate that the losses in industrial production from the decline in nitrogen dioxide emissions that were caused by the tightening of containment measures were quite high in countries where low fiscal stimulus was used. However, in countries that used high fiscal stimulus, losses in economic activity are partly mitigated. And the same seems to hold for monetary policy. In countries where central banks implemented large policy rate cuts, we see that some of the losses in industrial production are mitigated in comparison to countries where small policy rate cuts are implemented and where economic losses are much larger. Now, on the right-hand side chart, we took a closer look at the role of fiscal policy during the COVID-19 pandemic. We study the impact of announced fiscal stimulus measures in almost 40 countries since the beginning of the pandemic. We find that fiscal measures have a positive impact on economic activity, but this impact can vary, and it depends in magnitude, and it varies in magnitude depending on a country's characteristic. For example, it is stronger in countries with more closed economies because any additional demand from the fiscal expansion is less likely to be leaked out through higher imports. It is also more significant in countries lockdown, these supply-side restrictions are being lifted because this offers more opportunities for the fiscal measures to circulate in the economy. So to conclude, this is my last slide. The pandemic is far from over, as we all unfortunately know. Even though containment measures are being loosened in many countries, economic activity is not back to normal. Through studying the decline in NO2 emissions, we estimated that industrial production during the lockdown period would have been reduced by almost 12% 30 days after the implementation of containment measures. However, the rebound in economic activity 30 days after the relaxing of containment measures is only 6%, which is about half of the losses that were registered during the lockdown phase. So in other words, scarring from the COVID-19 pandemic is already evident in the weak economic recovery. And it can be explained by many factors, and some of them are, for example, the changes in our behavior individually that is associated with the risk or the fear of getting infected, but also the fact that some containment measures are still also in place to maintain social distancing and to reduce containment. And so to go forward, it is crucial to limit any further scarring, and also lay the foundation for a stronger recovery. The lessons that were learned so far from Asia during the COVID-19 pandemic could be quite useful going forward, especially in the cases of second waves of infections. I will sum them up quickly. They are to act fast to flatten the pandemic curve, to put in place strong testing and tracing policies to avoid a second wave, to roll back containment measures only after the outbreak has been stabilized, and last but not least, continue to support economic activity through the use of macroeconomic policies as they help reduce the cost of containment and they sustain the economic recovery. Thank you. I will stop here.
Okay, thank you. Thanks, Nour, for sharing your presentation with us. I can say that we see the annual meeting sign at the top, so it must be something you shared with the governors, central bank governors,
Yes.
and then this, finance ministers, okay? So the next presenter will be Professor Inkyo Cheong, and he'll talk about COVID-19 in Korea, success based on past failures. So Nour, if you can stay, this is a great country study for you guys. So, and then you can stay, and then after these comments, we'll have Q&A sessions. So it's already 9 p.m. for you, but we do appreciate if you can stay with us, okay? So now the floor is yours, Professor Cheong.
Okay, thank you for kind introduction. First of all, I would like to thank the organizer of this wonderful gathering, especially President Kim Heungchong, who is in charge of KIEP. One day, last April, my old friend Richard Bolden told me to write, to contribute a chapter on his COVID-19 book published by CEPR. So I told him, hey, I'm not an expert on COVID-19 virus. So don't worry, even Paul Krugman will join us. So no expert, no COVID expert in the world. So you are. So actually he encouraged a lot to write a chapter for the book. So it was published and it's translated into Korean by 매일경제 newspaper. After then, one of my friend, Wing Tao of UC Davis, asked me to write a chapter, a paper in his journal's special edition for COVID-19. So actually, the paper I present is supposed to be forthcoming in Asian economic papers, possibly mid next year. Nour Tawk, colleague of IMF, she briefed the progress and the policies in containing the COVID-19 virus in Asian countries. Her presentation was quite excellent, and she gave good questions. I'm trying to focus on Korean case. So my presentation can be very helpful in understanding some specific case, which is quite successful in combating the COVID virus. So as of November 22nd, we have almost 100 cases infected with the COVID-19 virus. Also, we have almost 1.4 million deaths. If we look at some data, so everybody knows these numbers. Now, Korea is ranked 92 in terms of a number of COVID cases. If we look at some numbers, these 5 countries has a similar size of a population, about 50 million to 60 million. As you see here, how Korea was successful in containing the spread of COVID-19 virus. So let's look at some trend. Here, we had the first infected person in January.
Could you check the computer?
19.
Okay.
After then, we had a national pandemic. So in 1.5 months later, we had more than 1,000 cases in one day. As you see here, it's very, very speedy growth over number of cases. So this time, world mass media report on articles, Korea would be in danger of having the second most COVID cases after China. In 2 months, as you see here, we could contain the spread of the virus. Of course, we had a small peak in summertime. Also another one in wintertime now. But our health authority will successfully contain this small part now. So this shows the hotspot in Daegu area, central part of Korea Peninsula. So you see here, so in 2 months, we had a success story. Many say, even Nour Tawk of IMF, she mentioned, we need 3 T's: tracing, testing, treating. Let me look at a little bit about this. Let's look at first testing. Actually, Korea had very rich bio-industrial base, as well as we have many research staffs. So we could produce test kits in 1.5 months. So we had the highest number of testing record per million population up to August this year. Treating, this is quite important. We had a very efficient national healthcare system, which cannot be found in other countries. Also, we had a very devotional medical human resources. But these two can be found in other countries. The first one is quite important, I guess, tracing. This is Korea's unique factor. In order to understand this, I'm going to spend a couple minutes regarding Korea's Personal Information Protection Act of 2011, which regulated the protection of privacy. Very, I'm going to say, strongest in the world. So if we kept this law, we couldn't trace the impacted person. So we can say, okay, we need 3T, but 3T is quite difficult to implement in practice. So many countries, they already chose national lockdowns and border closures. We had a very, very bad experience in 2015 with the inflow of Middle East respiratory syndrome, in short, MERS virus in May. At that time, the first impacted person, he visited several hospitals, including Samsung Medical Center, without any equipment to prevent virus from himself. So 36 people died in 2 months, and almost 200 people were infected. So at that time, we had a national debate. What gonna do now? Saving life versus privacy protection. Finally, National Assembly, which is Korean parliament, decide to provide the full power of tracing to the National Health Authority. This is the whole picture. As you see here, National Health Authority can access to mobile phone carriers, immigration services, policies, credit card companies, etc., etc. So we could trace, identify 98% of cases where they are contacted with the virus and impacted. So we had some small discussions about, okay, we agree, okay, we need to prevent infection, but some small cases of violating privacy protection law. So small minor modification made last couple months ago. But the basic structure of giving full power to the National Health Authority did not change anything. So with this, we could trace. So now, with the COVID-19, the government, of course, the government implemented, actually they did a good job in tracing, as well as in testing and treating. Also, we introduced social distancing this time and voluntary quarantine. So we could have smaller losses than other countries. Also, we did not have national lockdowns. So it's not working.
Could you check the computer?
So this graph shows how important social distancing and self-quarantine. Without those, we could have the orange line, which shows number of cases. So if this happened, Korea would be like Italy or UK. So we could contain as like a blue line. This shows mobility of a person in terms of recreational activities. As you see here, the Korean line is, as you see here, I'm sorry, it's difficult to figure out the lines. The first one, the topmost one, the blue one, it shows. Of course, we reduced number of meetings. We try to have social distancing, but not much like other countries, US and Italy and the UK. The yellow line, a dark yellow and the orange line. As you see here, what is it? The UK line is dark blue. So they had the national lockdown in May, June. So economic impact, we had much smaller than others. So other countries now like this. We don't know yet where it goes. So IMF forecast Korea's GDP growth rate would be minus 1.9, which is much smaller than world economy. I try to discuss some economic issues in the context of preventing COVID-19 disaster. So you can figure out what I'm trying to say. The one point is just if you mention the government try to boost the economy by spending national budget, but I'm trying to say the sustainability of a fiscal balance. So other issues I'm going to skip. So let me jump to conclusion. So we could contain COVID-19 virus in several factors, basically 3 T's, as I mentioned. Also, Korean people's participation in social distancing and self-quarantine was also very important in reducing the spread of the COVID virus. Final issue I would like to raise is governmental, the government's digital New Deal policy. So why do we need the digitalization? So we could change the smart curve, right? So in order to have digital New Deal industrial policy, of course we need technology, professionals, expert, investment. But more important requisite may be legal base. We already observed the importance of legal base in combating the COVID-19. I'm going to say digital New Deal policy should be accompanied with a sound legal base for data utilization by business. Korea's data laws are still biased for privacy protection, although processing personal data in unidentifiable format was allowed in January this year, but it's not enough. So I'm trying to say we should have time to think about how to modify or revise data laws to be compatible with the government's digital New Deal policy. Let me stop here. Thank you.
Okay, thank you, Professor Cheong. So let me invite 3 panelists to the podium. Do you have slides, or you will speak, right? Okay, please. Yeah. Okay, so we heard from Dr. Tawk about the Asian experience in general, and then Professor Cheong about the Korean case. So, okay. So we have the 3 excellent panelists. So let me start with the Professor Sang-min at Myungji University. Are we ready? Okay, so you have 15 minutes. Yeah.
Okay. Thank you for having me here, and thank you for the introduction. I'm Sang-min at Myungji University, and I'd like to make 3 points in this discussion. But first of all, I'd like to thank 2 presenters for providing us valuable insights on how we understand COVID-19 and the pandemic and containment policies. So Dr. Tawk taught us 4 lessons from the Asian experiences. First, we should act fast. Second, test and tracing could be more effective tools. And lesson 3, and this one is what I really want to echo in this discussion, which is that we need to get the timing of the exit right. And lesson 4, macroeconomic policies might be also essential in responding to the COVID-19. And Professor Cheong also told us Korean experiences very in detail. And it's well known that South Korean policies has been successful in terms of both pandemic and GDP. And at least a part of this is a legacy of 2015 MERS outbreak, which have taught us lesson 1, 2, 3, and 4 already. And one point I'd like to emphasize from Professor Jeong's presentation is that actually South Korea has a very important feature, which is that people followed government guidelines very well, relatively speaking. This includes wearing mask, early and near universal use of mask in the early stage, and following the enforcement. And this is actually related to the first point I'd like to make. The first, as an economist, I believe the model could be a good way of thinking the situation, especially through the counterfactual analysis. And I have a quantitative model of an economy hit by a pandemic, which might complement the model analysis presented in Dr. Tawk's presentation. Basically, to save time, I'm not detailing all the model ingredients and mechanism or simulation results and etc. But I'd like to focus on 2 relevant results that is related to the presentation. The first is that the result from the model is that quarantine enforcement is an order of magnitude more effective at containing the virus, even when testing rates are low. So we say test and tracing, but as Professor Cheong emphasized, tracing might be the more important force. And this says that the contrast between lockdown and South Korea policy is not in the intensity of testing, but might be in weak restrictions on the activity of many versus strict restrictions on a targeted few. So this might be a key to understand the Korea's success. And another feature that I'd like to complement is that heterogeneity says that low-skilled workers and self-employed lose the most both from the pandemic because they are exposed more, and also from the containment policies from government. And this is because they are usually working in jobs with lower productivity when working from home. So this calls for a need for redistributive policy responding to the COVID-19. I will skip the detail. And the second point I'd like to emphasize in this discussion is to basically rephrase of lesson 3, which is to get the timing of exit right. And this lesson actually implies to me that there is no clear trade-off between GDP and public health. Why is that? Even though the immediate effect of containment policy is to reduce GDP, why we introduce containment policy? Containment policy is introduced to curb epidemic, to reduce the infections to begin with. And this is good for economy. This is because an epidemic makes people reduce economic activity for fear of infection, even without government lockdown. And this is what we experienced in South Korea in February and March this year. So this is a brief situation in South Korea in February, March of 15. The cumulative cases per 1,000, population as of March 15 by region. And we can clearly see that the infection has been concentrated on one region, which is the shaded area, Daegu-Gyeongbuk area. And at the time, this local outbreak has been due to a super spread of religious sect, which is independent of any socioeconomic backgrounds. And there has been no social distancing, no government-mandated social distancing at the time. But by comparing this shaded area and white area, we could also see the huge employment losses from the shaded area. And surprisingly, the pattern is exactly similar to those in the United States and UK, which has implemented lockdowns. So I'm not saying that containment policy has no cost, but saying that that is not the end of the story. So the containment policy is not only good for public health, but can also be good for GDP. The last point I'd like to make is related to the treaty policy. So as Professor Cheong argued, treaty is effective. We all know that now, but it's difficult to implement. Then the question is that, is there any other way? Is there any other option that we may be able to take to by targeting some specific groups, and in the United States or United Kingdom, that TTT is not really ready. And this graph shows the exposure risk over the vertical axis and the work from home productivity over horizontal axis. Clearly, there is a negative correlation, but the relation itself is not far from tight. Meaning that given the same exposure, there is a much variation across work from home productivity. And this means that by sending those with higher exposure and higher work from home productivity first, we might be able to reduce economic cost. And that is what we call smart lockdown, which is represented in blue. So red circles are those who sent home during the actual lockdown in the United States. And the blue are what we call smart lockdown. And the calculation says that we can reduce same amount of total exposure at potentially much lower economic cost. This is just a thought experiment, and I'm not saying that this is the only way, but I'm saying that there might be other ways to targeting some groups, thereby saving economic cost. So main takeaways. So pandemic makes people reduce economic activity for fear of infection. And this means that containment policy, because containment policy is implemented to prevent infections, and that is growing out of control, which is also bad for the economy, meaning that GDP and health might not be in conflict, especially in the medium term. And targeted policy can promote effectively contain the epidemic at a lower cost of economic cost, not only TTT, but also might be alternative lockdowns. And the third, I'd like to emphasize again that this chart has a nature that socioeconomically disadvantaged groups are hit hardest. So basically the best way to revive the economy is to eradicating the virus. And I think we all agree with this. But the COVID-19 will likely to have long-lasting redistributive effects, not only the slow recovery as an aggregate. Okay, so that's it. So thank you for listening.
Thank you, Professor Om. So the next panelist will be Professor Yoon-Soo Lee from Seoul University. Okay, it was 15 minutes.
Great. Thank you again for the presenters and organizers for such a nice conference. So I'll discuss the two papers, presentation by Dr. Nour Tawk and Professor Inkyo Cheong.
Can you say a word about the background picture? Or if you mean to?
Okay. Oh, no, it's just.
Oh, no, it's not about
COVID-19. Doesn't mean anything.
I thought that's COVID-19.
Yeah, sorry. Yeah, it's just the template that I got. So, okay, so these two presentations talk about the lessons from Asia, that containment measures has been very effective, but there were massive short-term economic costs that I'm going to discuss more. And Professor again emphasized these 4 lessons from the IMF presentation about acting fast, strong testing and tracing policy, and don't exit too early. That's kind of the lesson that we are kind of thinking about nowadays, actually, after this possible third breakout, and the macroeconomic policies. Sorry. Okay, and so from Professor Cheong's presentation, we heard that past experience from MERS helped, And the other thing is that we didn't have a national lockdown, but we have a large-scale testing, and contact tracing was very helpful. And we have kind of everyday life quarantine that's kind of helping to prevent the spread of virus. But these have economic effects that we see that driving consumption, and we are still struggling with the driving export due to the decrease in the demand for foreign countries. And we are trying to remedy this economic impact through the fiscal expansion, but we also have a problem of increasing the national debt and the debt sustainability. Okay, so issues going forward, maybe the quarantine versus the privacy issues, that's still important issues. And because the MERS and the COVID is not quite the same, and the balance with the economic recovery. Also, we have a heavy spending through the fiscal policy, whether all these policies and government spending can be justifiable given the increase in the debt for the nation. So in this discussion, I'm going to talk about some of the lessons that we have learned from the studies by economists to justify the government spending. I mean, or in the other way, to justify the large government spending, we have to think about what are the economic impacts. And so I thought Dr. Ong would have presented a lot more about his study on the labor market. So we have to understand who are getting affected and which sectors are getting the negative effect from this spread of the virus. So as Professor Cheong presented, Korea, especially actually Daegu area, presents very unique experiment, actually unique background for the study. So we had a huge jump in the confirmed cases and dramatic drop down thanks to the containment measures and treating and testing. So there are some studies. So I just picked three that I thought are useful to give some information. Actually, two studies by Dr. and Lee and Shin, and there are another paper on the labor market by Lee and Yang. And today I'm going to talk about to complement the studies that are provided by these two studies and also the study provided by Dr. Tawk. I'll talk about the study by Kim, Lee, and Yang. Lee to kind of utilize this opportunity to promote my recent research. Okay, so Daegu is a good example to study the spread of coronavirus and also the recovery period, given that it is one of the unique example that coronavirus spread was contained in a relatively within a relatively quick time period. So in this study, we used data on cell phone users and credit card spending. So data on cell phone users is a good complement. Actually, IMF team has a very creative way of measuring mobility using the NO2. And in this study, we used the cell phone users so that we capture the mobility. And we compare the before and after the Shincheonji breakout. Okay, so this paper, this figure in the black line shows you the mobility. This is a weekday mobility. And there is a gray line that shows the mobility for the weekend. And the red line is the confirmed cases. As we are well known, the confirmed cases dramatically increased at the end of February and decreased. And one thing that is noticeable in this figure about the mobility, the black line, is that in Daegu, we didn't have quarantine, but the mobility dramatically dropped before the dramatic increase in the confirmed cases. So people kind of maybe fear matters, or government suggestion to stay at home guideline worked. So thanks to this decrease in mobility, even without the government reforms, the the region-wide lockdown. I think it's one of the regions that Daegu was successful in the containing the virus. But one lesson here is that lockdown may matter, but even without the lockdown, people's self-cautiousness actually can help to prevent the spread of the virus here. Okay, so the mobility is correlated with the consumption. So in these two figures, we plot the spending along with the mobility data. So black line here is the mobility, and the red line is the credit card spending. So compared to the weekday, weekend sees the more drop in the mobility because weekday you have to go to work, weekend you do not. And you see that compared to the week before the breakout of the virus, mobility dropped about 30% on the weekend, but consumption drops on about like 50%. So from this mobility and credit card payments, actually, drop in mobility is related to the drop in economic activity and is directly related to the decrease in the spending. And what is surprising is that the trend moves closely, very closely together. But one thing, mobility recovers first, but spending takes time to get until it kind of recovers. And after like 10 weeks, it does not get to the 100% of recovery because compared to the week before the virus breakout, the mobility and consumption is still below the previous level. Okay, so consumption has recovered as mobility recovered, but the speed of recovery varies. So for example, restaurant, here red is the mobility and blue line is the spending. And while mobility recovers, spending takes a lot longer time. And some like theaters and movies, actually you don't see any recovery at all, even after like 2 months time period passed. Some sectors, you need a haircut after a month, so hairdressers see the relatively quick recovery after a month, and outdoor sports see the dramatic increase. The blue line is the spending, so there is a big jump. Actually, you can think of golf. So there is obvious reallocation between sectors. People switch consumption from some sectors to other sectors. On the other hand, indoor sports is just like the theaters, that you don't see any recovery at all. The other thing that we see from the data, another lesson is that not all sectors have recovered. So in this diagram, we see the spending of card across sectors. So I present the gray bar, that's the first week, and the black bar is the 5th week, and the red bar is the 10th week. So at the right-hand side, you see the pharmacy and supermarket. Actually, supermarket actually benefited from the COVID virus because you didn't go to restaurant, as you see the second bar from the left, but instead you started cooking at home. So there was an obvious increase in the supermarket that actually decreased as people start moving to the outside. But after 10 weeks, most of the sectors recovered, but you can see the accommodation like hotel, restaurant, and even hospital does not recover to the full stage. Here the bar, the horizontal bar 1 is the 100% recovery compared to the previous breakout. So these are the essential group. So something that you have to spend, but even for the essential group, there are some sectors that's not recovered fully. And some non-essential groups, then there is a more diversity, variation. So theater, you don't see recovery at all. Entertainment, after 10 weeks, is still less than 30%. And sports indoor having still trouble, while furniture actually dramatically increased after the 10th week because we have to spend more time at home and office, I guess. And outdoor sports is one of the beneficiaries. Okay, so from this analysis by economists, we have a couple of lessons. First, in Korea's case, did not lead lockdown to restrict mobility. Fear matters and self-cautiousness kind of lead to the kind of everyday time quarantine. But the question will be, with the second and third wave, I mean, this kind of lockdown can be still working. And probably, I did not write down here, but tracing was possible at the earlier stage, and that was one of the reasons that Korea was successful. But I kind of sympathetic to Professor Ohm's view that tracing, quarantine is more important, and the tracing may be getting more difficult given that the third wave spread is kind of widespread. And based on the information about which sectors getting damaged and which sectors having still problem in recovery, we see the heterogeneity in the degree of damage, that not all sectors have recovered. And I did not prepare for the slide here, but usually with this kind of recession, we know that small firms are more affected, but COVID is kind of unique in the sense that large firms like theaters and large restaurants and large malls, wherever people are kind of trying to gathering, people started avoiding. So it's not just small firms, but large firms are also affected. That has a different implication in terms of policy. And I think given the limited resources that is increasing, and we may have like interest rate risk as Professor Cheong suggested, I think it's important to focus on those sectors that are directly affected from the COVID. Thank you very much for listening.
Okay. Thanks, Professor Lee. Okay. So, the third panelist is Dr. Cheong, a senior research fellow at the KIEP.
Right. Thank you, Chair. Thank you for the interesting presentations by Nour Tawk and the Professor Cheong. First, I'd like to share with you about my main focus right now is, as you might not see, but I'm almost towards the edge of this podium, so I try not to fall down. So that's my main focus during this session. I'm telling you this because we are talking about the COVID-19, and it was a pandemic. And we are listening to news that the vaccine is very near. But I'd like to quote Yogi Berra saying that it ain't over till it's over. So we have learned from the great presentations that what happened, but we still don't know what's going to happen in the next year and so on. First of all, the Nour Tawk showed us that the containment measures are kind of same as the restricting economic activity, and she was brilliant to use the NO2 emissions that are equivalent to the 12% decrease in industrial production. And her main message was that act fast and exit right. But the key is, as many other discussants and the Professor Cheong also mentioned, that in the case of the Korea, people's cooperation with the government authorities, but it is not coming with no cost, right? It's at the expense of some sort of the privacy protection, as some people also mentioned. So it is not only fiscally the government, but also the intervening some private life. As for so I'll come back to this issue, but for Nour Tawk's presentation, you mentioned, you actually used this containment measure, and that variable, maybe it is like the containment stringency index. But as you know that there are total lockdowns and the partial or some various degrees of the social distancing. Could you elaborate more about the use of the containment measure when you show all those graphs with the days and so on? How these differences in terms of the stringency mattered? And as for the Professor Cheong's presentation, I understand that the Korea shows some success, but But it's not an end, right? As we see that the new cases soaring these days. And do we have an answer? I mean, it's a kind of the contemplation, or do we have some rigorous measures? For example, Professor Cheong showed that the Korea, compared with some other countries based on the population size, and the many people are saying that the Korea went through the large-scale testing. Is that true? Are we have we tested more people than these other compared countries? So maybe having tested number of the population-based comparison might be useful. So if you have some the numbers, would be great. If not, I suggest you to add this kind of the information so that we can say that. Of course, early testing and tracing actually makes a difference. I understand, but the total number of testing should be also an important indicator. And as for the privacy issue, we know that we have done a lot of the early testing and the tracing and so on, and we are saying that the Korea's success actually was based on that. But initially at the early stage of this COVID-19 pandemic in Korea, we had very stringent kind of the measure about the tracing, and in some cases the whole country knew about some person's whereabouts during this and it was and even some people were prosecuted for lies about their movement and the whereabouts. Is it globally accepted the norm, or can we? I mean, because in the Western countries that's sort of ridiculous. I mean, it's hard to imagine. But in Korea, do we accept this kind of containment and or the control and intervention by the government? Of course, Korea revised this kind of the method and tried to protect some of the privacy more. But initially, some people got the scapegoat. And how can we say that some of those losses by some people can be compensated, right? If you are the person, I don't know if that's ever compensated. So we have to be more cautious about implementing some sort of the policy or the measures, even if it's for the good of the whole country. Still, individual life should be respected, I think. And then there are some outlooks about the GDP and trade, right? The IMF and KIEP also and KDI show some the economic growth, like the 2020. Korea's economic growth would be minus 1.9, and 2021 it's going to be 2.9 by IMF and KDI. It's minus 1.1 to 3.1 next year, and so Korea seems to be doing fine. But in terms of the WTO's trade growth measure, actually earlier they mentioned that it's going to be world trade will decline by 13%. That's the most the optimistic scenario, and 32% is pessimistic scenario. But more recently, they said that it's going to be minus 9.2%. It's better than the optimistic scenario they suggested, which means that we are getting better. And then next year it's going to be 7.2%, right? So that's positive. So these revised outlooks reveal a brighter future in terms of the economy and world trade, and based on that, how your outlook would change in terms of the Korea's exports, and obviously at the onset of the pandemic. Korea's success partly relied on the contact tracing and using the digital technology. So Professor Cheong mentioned about the digital New Deal, and seems like the digital New Deal, including the new technology and digital devices, that should be accompanied by the legal base for the data utilization for business. I agree with you totally. But in terms of the data flow, I think there's especially the cross-border data flow, that's going to be an issue. And with this pandemic, I would say that the larger governments would prevent, the sort of the way forward for the cross-border data flow. And lastly, I'd like to mention about the labor market, because Korea's growth potential has been declining, and without the labor market reform, as Professor Cheong mentioned in his paper, the outlook is not so bright. So due to the low fertility rate and the quickly aging population, what do you think can be a breakthrough to raise the Korea's economic potential in the medium and long term? All right.
Okay, thank you. Thanks, Dr. Cheong. So, okay, so before I open to the questions from the floor, let me forward a few questions from the YouTube audience. Yeah. The staff forwarded me the questions. It's the first set of questions about like the medium to longer term questions. So many Asian countries have transformed themselves from agriculture to manufacturing, now to the service sector. And how do the two presenters think about this more longer term structural transformation would be affected by the COVID-19? And it's especially important, as we heard from I don't know whether Nour, you stated from the first of this seminar, but as we heard from the president of the KIEP, Dr. Heungchong Kim, in his opening remark, that the Korea and many other Asian countries have high dependence on the foreign sector through trade. So this COVID-19's effect, the longer term effect, hard to tell, of course, but what's the baseline scenario about this longer term effect? I'd hear both of you. And the other one is it's a longer term issue, but the short run political situation about the United States. Biden, if he's, I don't know what's the right verb, confirmed or by the current anyway. So Biden said that he will return to the Paris Accord right after the inauguration. And whether the change of the United States in terms of the environment policy, how will it affect together with the COVID-19? So those two questions from the floor, either from the YouTube audience, and also I'm looking at that live, and one gentleman sent a few questions, and if I may summarize. So the current third wave, if I call this a third wave, and I don't know how many waves we'll have, but the current wave, the stringent index of the lockdown and so forth are not as strict as in the first and second wave around the world, and also in Korea in some sense. And what would be, Hannah, what's the role of the policy, the fiscal policy or the fiscal action on that regard, and what's your current view? And if I add or recycle one question from the previous session, so this is the last one is mainly to Nour. So you shared a few slides from the from the previous session with Dr. Banerji, and one question is maybe relevant for you because you worked in MCM department before you moved to Asia Pacific, and you also the desk of Malaysia. I can see from your CV. So currently the IMF is asking for loose monetary policy, while it's also asking for stringent macroprudential policy. And of course, when you are at the country desk of Malaysia, of course, situation is different from Korea. So if you can you can share, which you have already told Malaysian government or in Asia in general, that would be also really helpful, especially compared to what you have presented about the COVID. Okay, so let me collect more questions from the floor. Okay, yes, Professor Shin.
So I have one question for Dr. Nour, and it is very interesting presentation, and you emphasized lessons learned from Asia, but I'm not sure how easy it is going to be to implement the same policies in other areas. For example, many discussants already mentioned the difficulties, like the sacrifice of privacy, or cooperation, volunteer cooperation with the government. Do you think that without those we can implement the same policies learned from Asia in other areas? Another thing is that you said act fast, or get the timing of exit right. But how fast is fast? What are the criteria to choose the right timing? So it might be not that easy to implement the policies.
Okay, thank you. Any other questions? Okay, so we started this session about 15 minutes late, so if I give like 10 minutes to each presenter for answering sets of questions, we'll end like 10 minutes late, so I save 5 minutes for your lunchtime, okay? Okay, so Dr. Tawk, you have 10 minutes.
Okay, I received a lot of questions, so let me see how I can address them. The first one was about the impact of the pandemic on the services sector, and I think this question relates more or less to scarring. I think Angana probably covered in her first presentation that the pandemic has had a very adverse impact on all economic sectors, but the sectors that are mostly reliant on tourism or contact-heavy, the physical contact-heavy sectors have been really hit because, like others mentioned, even though the pandemic might be under control, you still are averse to going to get your hair cut, or going to the movies, or sitting indoors in a restaurant. All of these behaviors that have changed because of COVID-19. And we don't know yet whether these effects will be permanent or not. We do know that in past recessions and in large recessions, there are these sector reallocation shocks. So they can be permanent shocks on also on employment. So here it's very important that the supportive macroeconomic policies play their role. We have, there are many ways in which you can continue to support these sectors, because the recovery will also be weak going forward. So continuing to roll out supportive measures to help with unemployment benefits, direct, coupons or transfers, direct transfers when possible. This is a way to combat the pandemic, the impact of the pandemic, and just until the situation normalizes. One question was about, let's see. So there was also questions about the containment measures index. Okay, so let me explain. The containment measure index is built on 8 categories. These categories are on the types of containment measures. So we have school closures, workplace closures, closures of transport areas. We also have bans on international travel, also bans on gathering, and also restrictions on the sizes of the gathering, and cancellations of public events. The index will score each of these subsections based on their levels of stringency, and then it will take an average. So it will reflect the stringency based on these kind of 8 broad policies. So for example, if a country is not implementing workplace closures, which is one of the highest closures that you will that you will have, then the stringency index will be lower. So when you're seeing on my slide the impact from 0 to 30 days, this is the impulse response function. It's showing the response when you're going from the least to the highest stringency level. And okay, so that's one question. Then it was about the implementation of the lessons. For example, about acting fast or putting in place strong and testing and tracing policies. Like you mentioned, you know, these are, I like to say that these are simple lessons, but they're not easy lessons. So for example, acting fast, countries like Australia or New Zealand, for example, if you take New Zealand, they implemented containment measures when they were still in the single digits. So even in the low double digits. And by acting this fast, they locked down their economies, but then they could relax containment measures and life could go back to normal after only a few months. And now practically they are living COVID-free, for example. The same goes for Vietnam or also the Pacific Island countries where they haven't had COVID-19 incidences, or they are in very low levels compared to the rest of the world. So these are lessons that are difficult to that are simple, but they might be difficult to implement. We will see, for example, now in this new wave of infections, especially in Europe, they didn't implement containment measures until they had peaked. They had even the numbers of cases had already surpassed the first wave when they decided to act. So this is not really acting fast. And also, as the model showed, the model results from the analysis, when you take time, when you delay placing effective containment measures, then this impact is much larger. Is much larger on economic activity, because you cannot control infections as quickly as you could have done before. And so you will have much more negative externalities on economic activity. I agree that the case of Korea is a very interesting case. We saw cases like this, for example, in Japan. They did not implement stringent containment measures, but I think here the role of previous pandemic, the experience from previous pandemics may have come into help. In Korea specifically, the large-scale testing and tracing policies is something that has been really impressive and that has stood out, and it partially explains the success of Korea. And this has not been tested by us, but it's also something that, you know, is definitely to consider, is that the compliance or to the respect to the rules or the trust in the government. And this may have also played a big role because, like you said, you know, if you compare it to the US, there's not a big compliance in wearing masks, or there might be a pushback. But for example, in Korea or in other countries in Asia, you don't see this type of doubt or disregard for the public health measures. So let me think. I think I've covered a few questions, but I'm wondering if I'm missing a few. You asked about the impact of you asked about the different impacts for Malaysia. So Malaysia versus other countries, for example, and especially with macroprudential policies and financial policy, so monetary policy. So I think, you know, the official line has been to use monetary policy and fiscal policy to continue to support as much as possible. I think Korea and Malaysia, for example, are very different countries. Korea is an advanced economy, and Malaysia is an emerging market economy. So in that sense, Malaysia has more monetary policy space, but it faces different challenges than Korea, which are possibly capital flow pressures, for example. So the role of macroprudential policy is the same, will remain the same, which is to address the risks that might accumulate from and address financial stability. So there is not really a specific specific advice or advice that we are sharing with what I shared with the Malaysian authorities. The guideline is always the same, to continue to use the policies to support each other, macroprudential policies to address vulnerabilities or the buildup of risks in the financial sector, and monetary policy. The monetary policy continues to also address financial pressures, but also it follows the inflation. It does not fully follow the inflation targeting regime, but of course it has its goal of inflation and output and employment. So I'm gonna stop here and see if I missed a question, and if anyone wants to remind me or ask another question.
Okay. Yeah, great, thanks. Thanks, Nour. It's okay. So now you have 10 minutes, Professor Cheong.
Okay, thank you very much for very insightful comments and questions. I'm gonna pick up some of the questions. First, let me start the last one, which was collected from YouTube participants. The question was, what will be the policy of Mr. Biden, president elected, about environmental policy? It is not surprising for the Democratic candidate, President Biden, to raise strong environmental policy, because it is a policy initiative of his party. He mentioned he gonna return to the Paris Agreement. I think he will. But the issue is, actually, when we say environment policy, domestic politics, we should think about the domestic policy and politics and international politics. Domestically, as you know, the Senate will be, actually the Republican will be dominate the party in the Congress. So the Republicans, they are quite hesitate to adopt a strong environment policy. So it will be almost impossible to amend existing laws in U.S. laws. So basically no progress, I expect. However, the new government will push environment policy. That means he will spend most of his energy in dealing with environmental agreement, including CO2 tax. So it will be quite a big risk for Korea. Next question was, what will be impact of COVID-19 on the development of Korea's industrial structure? Yes, we need to improve our value added of manufacturing sectors. Also, we had a higher portion of service sectors. Korea's per capita GDP is a little more than $32,000. So we can't keep many of traditional manufacturing sectors. So what we need, the most effective way is digitalization. So another question was what will be how to create a new momentum for creating many jobs. Of course, as mentioned in my paper, we need reform in labor market, but that's not will be sufficient. We have a very strong policy for New Deal, or the digital New Deal. So digital New Deal is quite timely, and we need a more smart way to invest almost 1/3 of our national budget, of course, over next 5 or 6 years. So we should have, as I mentioned in my paper, we should have a legal base for flourishing our digital industries. So investment is not enough. Another question was, what's the background for WTO's overestimate for the loss of global world trade in early or in mid this year? Now they change. Global world trade, the volume of world trade will reduce by 9.2%, much less than 30%. So this can be explained. The policy of major countries in the world regarding COVID-19. So when they predicted, many countries was applying strong measures for containing COVID-19. But they changed their mind. So now we have more than 1.3 million deaths. So we should think both of the sacrifice, or I mean the deaths or other cost, as well as economic performance. So that's the main reason, I guess. Also, very important or critical, important issues regarding violating or evading privacy right. Yes, we had some cases whose personal information was revealed to public, or somebody was impacted, and some also very serious rumors. So that's the case. Those cases are early times, maybe up to April. After then, the health authority, they changed their own guidelines. So at that time, the identification of the COVID virus was, the rate of identification was 98%, as I told you in my presentation. But now, it's dropped down to 90%. So we have we worry about the widespread of the virus in the whole country. So that's, of course, we should protect privacy. But in 2015, then Congress, they agreed to change the privacy law. Efficiency of government spending issue raised by Professor Lee, I fully agree with him. Also, Professor he mentioned the importance of masking. Actually, I spent almost 1.5 pages regarding importance of masking in my paper. So we didn't, Koreans, actually we do not have any hesitation in wearing mask, because in winter time, many people wear masks in order to protect cold air, protect him from cold air. Also, even in summertime, when we caught cold, we wear mask not to give the bad the COP virus to other people. Also, we had a very good experience during the MERS time. Masking was a most effective way keep away from being affected by the MERS virus. So this time, people get used to wearing mask. So no violence regarding masking in Korea. So thank you again for inviting me as one of paper presenters, and I really appreciate Nour talk about the overviewing of Asian countries' containment policy against the COVID virus.
Okay, thank you. Thanks, Professor Cheong. Nour, do you want to add any final word before you go? It's almost 10
no,
for you.
I just want to say thank you so much for having me. And last year I was, physically there to be part of your conference. Yeah. So I hope when life goes back to normal, I can join again and participate.
Yeah, I have to see you again in person. And also, I'm pretty sure that your experience at Keio University about wearing masks in Tokyo would be a valuable kind of lesson for the IMF in general as well. Thank you. Okay, so let me thank the two presenters and the three panelists, and also the presenters and panelists and the chair in the first session. Okay, so please join me in thanking them. Thank you. Oh, and also a few dozens of people on the YouTube. Thank you as well on the streaming right now. Okay, bye-bye.
Yeah, thank you very much to all speakers, and this is the end of the conference. Once again, thank you very much.
그룹보다 국제 금융 쪽인데